And I hand the conference over to Mr. Nagesh. Thank you, and over to you, sir.
Thank you. Good morning. Good morning, everybody. Thanks for joining us today. Couple of updates from my side. During this pandemic, Greaves has undergone changes. We've had org restructuring, product business mix, and we see revenues back to pre-COVID levels. Some of the newer businesses, especially e-mobility and others, we will be talking about it in a little more detail. To bring a higher focus on each business vertical, we have restructured into 5 clear areas: automotive, non-automotive, e-mobility, Greaves Retail, and Greaves Finance. We worked around the various opportunities with emphasis on building resilience and looking at new avenues for growth and revenue. Glad to report that new business contribution has led to an overall increase of 25% of the overall business. And we continue to evolve through these measures to become a future-ready organization. We did see growth rebound despite sustained weakness in the three-wheeler shared mobility industry. Our overall engine portfolio, which is of course both auto plus non-auto, did see an upward momentum. Obviously, auto was down. We have invested heavily in creating robust EV ecosystem in terms of people, process, technology, and the scaling up. Last quarter, we did see the consolidation of some of our operations, and we'll get into that in detail. We did add leadership team members both in the e-mobility area, as well as glad to report joining of our new CFO, Mr. Jain. We've strengthened the leadership and customer-facing programs. The focus has also been on digital, both physical and digital. For example, in the case of e-mobility, our retail outlets continue to grow. 80 new outlets were added after the unlock. And glad to report that the demand is looking healthy on the e-mobility side. All this resulted in confidence in customer base, rapid increase in channel partners, etc. We're happy to mention that as we drive the EV mass mobility adoption in India, both in the e-two-wheeler as well as in the three-wheeler, we have seen growth in both the retail and overall customer engagement. And obviously, because of the pull from the market, you will be hearing from us soon on additional capacity expansions in South for the e-mobility area. Given this background, we will continue to focus as and when the market opens fully, especially in the area of shared mobility. Structurally, we had talked about cost reset. We have looked at 2 plants. We've gone down in terms of the plants, and there is a permanent structural 10% cost reduction. We are growing, and we expect this trend to continue. We are hopeful and optimistic of the shared mobility coming back in the next several quarters, but the other businesses continue to grow. With this, I will hand it over to my colleague, Ajit Venkatraman, to discuss auto business. Thank you.
Thank you, Nagesh. Hope all of you are well. I will take you through some of the key highlights and actions. It has been a tough period for the industry, and we were not immune to this slowdown. Overall, the automotive business went down by about 56%, primarily due to the dip in passenger vehicle demand, due to the social distancing norms, the delay in opening of schools and colleges. In the auto business, the cargo segment did see relatively good growth due to the last mile mobility, pickup in economic activity, and e-commerce. We see a revival coming in the coming quarters, and we see good growth potential in the balanced part of the year. We aim to drive profitable growth. We have a strong product offering to our OE partners. Our BS6 engine has performed very well in the market. We have secured long-term contracts with some of the major OEMs. We have also signed up with some international OEM and will announce it at the appropriate time. As Nagesh mentioned, we have consolidated our operations that is going to give us long-term savings. We have closed the manufacturing facility in Ranipet, and we have started moving our engine operations to Aurangabad from Pune. All this will lead to optimization of resources, cutting of unnecessary expenses, and making our operations much more efficient. With this, I will ask Arun to take over and give you the other highlights.
Thank you, Ajit, and good morning, everyone. We spoke about the diversification journey of Greaves and how it has been yielding results. The new businesses have given more than 25% growth over the period now. Ajit spoke about the auto business. On the other verticals, on the non-automotive side, the performance has been very well. In the genset segment, while the industry grew somewhere around 3%, our business grew almost 17% in Q3 over corresponding period last year. And our focus on the smart genset is helping us gain significant traction with the customer base. On the non-auto side, the other two important growth levers around the non-auto engines, which we have been talking about as an important diversification to our single application three-wheeler engines, has been growing fairly well. The non-auto engines grew almost 44% in Q3. On the light equipment side, the business grew more than 26%. So on the non-auto side, as a portfolio across various lines of business, there has been a good traction. Our aftermarket business has been back to pre-COVID levels, and we are confident that as shared mobility returns and the running of auto rickshaws increases, this will start accelerating much faster along with the sales of automotive engines. On the electric mobility side, under Ampere, the business continued its strong performance and delivered almost 2.25x growth over quarter 3 last year. In terms of absolute numbers, the business has achieved in 9 months the 12-month performance last year, and this is despite the impact due to lockdowns. Ampere today has over 300 plus dealerships, and like Nagesh mentioned earlier, almost 80 of them have been opened since the unlock process. So the traction remains very strong. The demand remains very strong. Our product range, which was refreshed during the festive season and including the new product launch on Magnus Pro, has been giving very good results, and there is a very strong and positive customer feedback in these areas. Also, to prepare for the future, we are also looking at creating a EV mega site in southern India, which will help us meet the accelerating demand in the market. So, in a nutshell, these are the highlights on some of the other businesses of Greaves, and I will request Dalpat to take over and give the highlights on the financial side.
Thank you, Arun. Good morning, everyone. It's my pleasure to be part of Greaves leadership team at this important juncture when group is diversifying into the new businesses. And also we are seeing business coming out of the COVID era and economy is recovering. As indicated by my colleagues, the e-mobility industry is on the upswing, and we have seen the positive results of it on our Ampere businesses. Overall, group has started diversification into the last mile mobility through e-vehicles in 2018, and that has started yielding results. If we talk about the revenue this quarter, we had a 495 crores of consolidated revenue, which was almost 50% higher than the last quarter. The PAT reported by the group is 21 crores, and that's the highest in the last 4 quarters. That augurs well as we move forward in the next year, because we are seeing the impact of COVID is waning away as we move forward. And last year, we see our e-mobility being a larger part of the revenue. In the fourth quarter, e-mobility was 12% of our consolidated revenue. If we talk about the overall challenge on the profitability, as we move forward, we see margins improving with the contribution of new businesses growing, and also with the product on BS6 maturing in the auto vertical. So that is what we have on the financial highlights. The last point on our balance sheet, the cash and cash equivalents, we had 212 crores of cash and cash equivalents as on the 31st December 2020. And the strong working capital management has worked very well in the COVID times for the company. Our net working capital days have reduced to 26 days. That is almost 7 days of reduction in the last 9 months. So overall, a lot of fundamental changes which has happened in the group, and they are going to yield results as we move forward in the next financial year. With that, I would request team to open up the forum for the question answers, and we'll be happy to take all the questions that you might have. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. An operator will take your name and announce your turn in the question queue. Participants are requested to only use handsets while asking a question. In the interest of time and fairness to all participants, each participant will be allowed 1 question and a supplementary question if needed. If participants still have more questions, they can join the queue afresh. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, to ask a question, you may press star and 1 now. The first question is from the line of Ashutosh Tiwari from Equirus Securities. Please go ahead.
Yeah, sir. Congrats on decent numbers considering that three-wheeler is still declining industry in this quarter, in the last quarter basically. So, firstly on the MPL side, what was the revenue for the quarter? If I look at, I think the first half revenue was around 42 crores. Is that correct? So then in this quarter we did almost 69-70 crores revenue.
That's correct, Ashutosh. So we did 60 crores of revenue in the third quarter for the e-mobility as a group, MPL group.
And this is including the three-wheeler part, right?
That's correct.
So is there a big jump in the realizations in MPL for the mix change on a quarter-on-quarter basis?
Yeah. So Ashutosh, on quarter-on-quarter, as Arun also mentioned, we are seeing revenue multiplying here because it is from a small base. If you look at compared to last year, there has been 126% revenue growth in e-mobility, and that is going to continue as we move in the next financial year.
Yeah, and also, if I may also add, the product mix is also helping as Ampere moves towards higher technology, lithium-ion based products as well as higher speed portfolio. Especially with the launch of Magnus Pro high-speed scooter, the positioning in the high-speed segment has improved considerably, so which is helping Ampere.
So basically on a quarter, like compared to Q as well, the mix has improved substantially. That's why maybe realizations also would have gone up.
Mr. Tiwari, so there is an echo coming from your line, sir. I would request you to be on handset mode.
Is it better now? Yeah. So I think that. Hello.
Yes, Ashutosh, we can hear you.
So I was asking that even on a quarter-on-quarter basis, the mix has seen substantial improvement. Can you highlight, like say, what would be share of high speed in this sales for us in this quarter versus, like say, last year or last quarter?
So typically the high speed mix is now gradually inching closer to almost 50% of our portfolio. This was and then it was only last year when we started entering the high speed segment, and it's already close to 50%. And the similar is the story on lithium ion, where Ampere steadily has moved beyond the lead acid based products into the lithium ion products. And we expect this trend to continue with Magnus Pro gaining more strength in the market.
So incrementally, like say, if I take a 2-3 year view on this Ampere business, how do you see the volume ramp up happening? Because what we've seen is that post BS6 transition, I think the electric two-wheelers are basically growing fast. Obviously, base is low, but still they're growing quite fast. So how do you really see this business over the next 2-3 years in terms of growth? Hello?
Hello, Ashutosh, can you hear me?
Yeah. No.
Yeah. So what I was saying was, at a high industry level, the expectation is that industry will start moving towards electric at a much rapid pace. And when we look at Ampere, if you've seen the growth over the past couple of years, we have been growing by 2 to 3x. This time there was COVID, but otherwise, historically we have been performing at that level, and we expect to continue that kind of performance.
35-40% growth can continue basically, I mean, broadly.
Yeah. So we don't want to give direct guidance. We don't give. But at a broad level, the way we have been growing, we would like to continue to maintain that pace.
And MBA number included ELE sales in also this quarter?
Yes, it's part of our e-mobility group.
Okay. And secondly, if I look at aftermarket sales, I think after 3 quarters, we have probably again gone back to 100 crore plus revenue run rate on quarterly basis. So do we expect to continue this 100 crore plus run rate going ahead? And what kind of growth we can see in this, say, over next 2 years basically? I mean, are we now set for growth structurally over next 2-3 years at a double-digit rate?
In the aftermarket segment, we have experienced the volume has come back to pre-COVID levels, and we foresee a robust growth. We have also done a working capital cleanup, and from now onwards, it is going to. We see that with auto rickshaws coming back to the road. And which needs a lot of fixing after being idle for a long period of time. We expect a spurt to happen in the coming quarters.
And two-wheeler, also we started doing a two-wheeler space and all. Roughly, I mean, is it contributing meaningful now or is it still very small?
We are still in the initial phases. We are ramping up our presence in the two-wheeler and three-wheeler multi-brand.
Okay, thanks. I'll join back the queue.
Thank you. Ladies and gentlemen, please limit your questions to 2 per participant. Should you have a follow-up question, would request you to rejoin the queue. The next question is from the line of Vineet Jain from Siddhi Capital. Please go ahead. Mr. Vineet Jain, your line is unmuted. Please go ahead with your question. Mr. Jain, I would request you to unmute yourself if muted from the handset. There's no response from the line of the current participant. The next question is from the line of Vijay Kumar, an individual investor. Please go ahead.
Good evening. For the next of numbers. My question is on two folds. The first one is...
Mr. Kumar, so your voice is not audible, sir.
Hello?
I would request you to move to a better reception area, sir.
Yeah. Am I audible now?
Yes, it's much better, sir.
Okay. Congratulations on good setup, and thank you for taking this question. I have two questions. First one is, with our monthly sales run rate, when would we be looking up for Capex? Second one is now the e-mobility side, it's not only about hardware, it's also about the software. And as you know, a lot of our competitors are looking at products and services that can come along with two-wheelers for manufacturers. What's our take on building capabilities on software side?
Yeah, hi, Vijay Dalpat here. So taking the first question on our capex, run rate continues to be on the same rate of around 12 to 15 crores a quarter. So that's going to continue on our capex front. Talking about the e-mobility, maybe Arun, you would like to add?
Yeah. So you're absolutely right. The software capability becomes important as the products, the next generation products which will start coming in will have smarter connectivity features, and Ampere is also working on building that capability both in-house as well as through smart ecosystem partnerships. And there are certain critical technology areas which we would be investing behind and building significant capabilities. And as we go ahead in the next generation products, we will add more software and connectivity features on our scooters as well. If you see with Magnus Pro, we started some initial features around. We had certain software control features like hill assist, which were relatively new in the industry. We came up with a renew feature, which a limp home mode, which was in the last a few percentage of the battery, the product goes into a power save mode so that it can give additional 10 kilometers of range to the customer, which addresses the range anxiety concerns that the vehicle should not stop in the middle of the road. So some of these we have already started building in, and we are very actively working towards further improving the customer experience through software and connectivity features.
Thank you, and good luck.
Thanks.
Thank you. The next question is from the line of Rohit Suresh from Samatva Investment. Please go ahead.
Good morning, sir. Thank you for taking my question. My first question would be, could you give us some update on the Crest engine part? You were previously saying you may add some OEMs in the quarter coming by, so if you could just give me some update on that part.
Thank you, Mr. Suresh, for your question. The Crest, the reason why the organization invested in the Crest engine is still very valid. And this engine actually provides a far superior fuel efficiency than any of the conventional LIC engines. It's a future technology, and we are actively working with customers both in the automotive and non-automotive space, where fuel efficiency is extremely important. And we hope that we will be able to give you some good news going forward.
Okay, thank you. Just I had another question. Will be on the Ampere part. So you said you added 14 new retail outlets. So what will be the mix? Like few of the outlets have a Greaves auto service part also. So what will be the mix between the only pure retail outlet and a combination of the retail plus the aftermarket?
Yes, and it's basically dependent on the dealer viability. And in some of the markets where the volumes are good to support standalone Ampere dealerships, there we have expanded, so almost 300 plus Ampere dedicated two-wheeler dealerships. In addition, like you said, in tier 2, tier 3 markets where independent volumes for two-wheelers may not provide the necessary viability to the dealer, and in areas where our Greaves network is strong, through the Greaves Care network, we are also selling Ampere scooters. So today, if we look at it, I would say that close to 25% of the sales would be coming from the Greaves Care network, and remaining sales are coming from the Ampere dedicated network. And going ahead, we will continue to leverage our complete mobility ecosystems and work on it. And if you look at it, in the past also we have spoken about the Greaves ecosystem coming into play to boost the entire e-mobility adoption. So we have 10,000 plus mechanics, we have 6,500 retail outlets, there are 180 plus Greaves Care outlets, and this entire ecosystem in a steady fashion will start getting configured to support some of the newer initiatives as well. So in a nutshell, it will be a healthy mix of the Ampere standalone channel as well as the Greaves ecosystem.
Okay, thank you so much. That's all from my side. That is enough.
Thank you. The next question is from the line of Manoj, an individual investor. Please go ahead.
Hi all. So my question is on EV segment. So considering that lithium ion demand is high, growing fast in India, so what are the measures we have taken to decrease the price of the battery, because that would take more share from the price what we quote. So yeah, that is my question.
Yeah. It's lithium-ion battery prices are falling steadily, and it is helping improve the value proposition of the product. So while on an immediate basis, if you look at Ampere's stated objective that we play in the affordable mobility segment, so in the 35,000 to 85,000 price bracket. So we remain true to that segment. As the battery prices are reducing, what we have done is, we have partnered with certain strategic partners in India so that the battery is locally sourced. That is point number one. Point number two is, while maintaining the prices, we are also focusing on localization and better quality partners for the non-battery related products and components, and improving the product value proposition in terms of giving a higher range. So at the same price, now the products are giving 10% higher range. So that's how we have been approaching this segment.
Okay. So one more minor question. So are we going for fast charging solution on the two-wheeler anytime soon?
So the vehicles, the Magnus Pro and some of the higher end vehicles are configured for taking faster charge. Having said that, two-wheelers as a segment is not constrained by the charging infrastructure, because it can be charged through a conventional charging points in 4 to 5 hours for a lithium-ion battery. So it is not a constraint, but for customer segments who want a faster charge, our products are configured for faster charging as well as swapping, as the case may be.
Sure. Okay. Thank you.
Thank you. The next question is from the line of Ashutosh Mehta from Edelweiss Financial Services. Please go ahead.
Good morning, everybody. Thank you for the opportunity, and congratulations on a good set of numbers. So my questions are revolving around the Capex plan. So if you can elaborate on what would be the Capex, what is the capacity expansion that we are looking at for Ampere in southern India, While we have mentioned that the current run rate of 12 to 15 crores per quarter is likely to continue, both for Aurangabad as well as the Southern India plant, is there any additional Capex that would take it? And while the cost reduction measures, we are looking at a 10% fixed cost reduction, what is the exceptional cost for this restructuring that is likely to be incurred over the next 2 years?
I think thank you. There are two parts of the question. One is the capacity on the e-mobility side. The second one is the restructuring costs. So let me take the first one. So I think we've clearly said, when you look back at last couple of years as part of the transition, we've gone from 6 plants now to 1 mega site, which is the core Greaves, all the engines manufactured in 1 mega site in Aurangabad. Actually, it's 2 plant locations there, so but 1 mega location, if I can use that word, in Aurangabad, right, on the engines manufacturing. On the e-mobility side, clearly with the demand coming in, we are consciously evaluating capacity expansion plans. We are in touch with a lot of state governments, and at the right time, we will be announcing our next set of plans for capacity on the e-mobility side. But the intent is to have a bigger plant in South India. That's the intent. Stay tuned for more details. Now for the restructuring cost.
Yeah. So Ashutosh, hi. In fact, this is a related factor. So as we are restructuring the group and consolidating at central locations, there are exceptional costs incurred for the movement. So in the quarter, we had the total exceptional cost of around 9 crore on the cost side, and we had a gain of around 4 crore. So net impact in the quarter was 5 crore. The second part of your question in terms of next financial year, there would be some exceptional cost which will come till maybe early part of the next financial year when we shift our one of the plants that we are consolidating in the Aurangabad further. So most probably by the first half of the next financial year, after that we will not see any exceptional items.
Sure, that was helpful. That was my question. Thank you.
The next question is from the line of Nikhil Upadhyay from Security Investment Management. Please go ahead.
Yeah, hi. Good morning and thanks for the opportunity. Sir, some of my questions could be quite basic, and I'm joining the call for the first time, so pardon me for that. My questions are more on the e-mobility side. One thing which you mentioned that post-COVID there is a bigger growth or volume adoption which you are seeing on the e-mobility side from the consumer. So if you can just help me understand what exactly has changed, and secondly, how the issues which the consumer have regarding the battery operability and the inhibitions, how are you trying to tackle that? And improve the product acceptability among the consumers. So what efforts or what things you are doing on the ground to improve those? If you can just help me understand. That is one part. And second is on the profitability side, just not now, but over a 3 to 5 year period, as I understand, as of now, your promotion cost and the cost of setting up the dealers and would be quite high. So how do you see the overall profitability improving for us in this segment over a period, and what kind of a volume would you say that probably once we reach these kinds of volume, the profitability will start coming up in the business? So if you can just help me understand the roadmap in this.
Sure. So, taking the first question, generally, if you look at in the past few months, since the unlock began, the focus on the growth in personal mobility has been much stronger across industry segments, and the consequent impact of that is that the shared mobility has been down. So the two-wheeler segment has, in general, performed fairly well. Also, what has happened is, with some of the newer products, the products, are bridging the gaps between the conventional engine-based vehicles versus the electric vehicles, and it's a technology curve which plays, and in the minds of consumer, it's a slow and steady process. Any new technology which comes in, there will be a time span for customer awareness to be built up, challenges like range anxiety, etc., to go away. So it will run its course. It won't happen overnight, but we are very confident that in the next 3 to 4 years, the adoption will be much faster. And our efforts are that how do we create the right base through the right channel, right product, right technology investments, as well as the ecosystem enablers like service, like financing, etc., to be ready as that rapid adoption starts happening. Having said that, the business is still growing 2 to 3x on a regular basis, which we continue to focus on. That is point number one. Point number two, around profitability. I think this is something which will play out over a period of time. Today, if you look at it, the industry is investing behind the products, also investing behind component ecosystem in the country through the localization programs. So which will have its own impact on the profitability side, but over a period of time, as volumes build up and as the industry matures and the lithium-ion battery prices come down, we believe that this industry will also start delivering profits. So I would kind of leave it at that, without getting into absolute numbers, but the profitability in the next 3 to 4 years will start coming in for the e-mobility businesses as well.
Sir, just on the first question, I understand that there is the inhibition and it will go over a period of time, but just taking leave from discussion with some of the competitors, like who are giving a trial basis for the product for 5-7 days, and if the consumer doesn't like it, they take the product back. Or basically either the consumer gets converted into the product. So basically the whole idea comes down to creating the trials among the consumers. So how are you creating those trials, or what process you are following so that the trials are happening? Because once trials happen, then only conversion will happen.
Yes.
So that was where my point was.
Sure. So I think good point. So if you look at Ampere has started becoming very vibrant in the digital marketing ecosystem in terms of creating a brand awareness. The second part is there is also very strong thrust on BTL activities in terms of customer camps, customer demos, etc. And with COVID, a lot of new initiatives like doorstep trials, etc., have started. So that is helping. The second part is the word of mouth. As the product and technology improves and the customer sees the edge which Ampere products are able to deliver, it also helps. Now, another customer segment is the entire B2B customer segment, where people are using electric mobility for the total cost of ownership advantage. In that segment, we have now 50 plus B2B customers, and there are regular repeat orders from customers where the vehicles run in fairly heavy use conditions of 100 kilometers plus a day. So the vehicles are able to withstand the use and abuse in the B2B segments, and the horizontal deployment on the retail products also in terms of reliability is helping. Now today we have almost 75,000 plus retail customers, and the number is growing fairly rapidly. So I would say that a combination of digital marketing, BTL activities, and expanding the customer base both in the retail and B2B side is helping us and will continue to drive the future volume expansion. So as of now, demand is not a constraint which we are seeing.
Just one last thing. If we have to, as you mentioned, during COVID, we tried the domestic trial basis. If we have to give a conversion rate, so if 100 people are ordering the product, what is the conversion rate? Is it like 50-60, or is it still around 20-30? And over last 3-4 years, I'm not sure since when we've started this program, but since the initiation of the program to now, how has that conversion rate moved? If you can help me with that, part one. Secondly, on the dealer network, is the cost of setting up a so my point is that the dealer which we are setting up should be, I would say, I would intuitively think that should be a completely new dealer, because if it's an existing dealer, he would see it as a cannibalization of existing brands which he is selling. So, so how are we going about on the dealer addition there?
Okay, a couple of good questions. So I think when you look at it, right, let me take it one by one. I think we've increased our digital efforts. So we have both in physical and digital. Arun touched upon a couple of the digital initiatives. We've seen a 60% growth in organic traffic, right, in the last few months. E-commerce sales have started. We started probably right in the middle of COVID with a new product launch called Magnus Pro, which has been received well. We started a virtual reality-based trials, which then led to a VR-based thing that would be sent to potential customers or dealers, right? And based on that, there were trials, rural demonstrations, capability trials. The conversions are increasing. As it relates to dealers, we are getting dealers, glad to report that from both all new dealers as well as existing automotive dealers, as well as very, very big auto dealers. So the demand, the interest from the dealer community is there and increasing. Last but not the least, this is the beauty of the ecosystem play that we are playing between both the Ampere retail outlet plus the Greaves retail outlet. Keep in mind, when it's a Greaves retail outlet, you have somebody doing a 3S, spares plus service plus sales, right? And depending upon the market, urban or semi-urban or rural, we are covering a lot of ground. And I think that's kind of what you're seeing from overall access to the dealer community, the digital marketing efforts, as well as the brand awareness that's increasing. Conventional dealers as well as new dealers are coming into the Ampere fold, and we thank them for their interest.
Sure, I have few more questions. I'll come back in the queue.
Sure.
Thank you. The next question is from the line of Manish Goyal from Enam Holdings. Please go ahead.
Thank you so much. I have a couple of questions. First, on the new OEMs acquired, the presentation mentions one OEM in India, so and global niche small four-wheeler OEM. So just if you can elaborate more as to what segment these OEMs are for, number one. And number two, on the Crest engine, you did mention that we are likely to announce OEM soon. Sorry, but sir, we have been hearing this for a pretty long time, and would really appreciate if you can kind of give us some timelines on that. Thank you.
Thank you for your question. First, I'll handle the new OEM question. We have signed MOU with both domestic and international OEM, and we will make the announcement at an appropriate period of appropriate time. But the sales of these vehicles will start in a year and a half's time. So that is what we can announce at this point of time. Regarding your question on Crest, as I mentioned, the Crest engine, the basic principle of the engine is still valid. It gives us a new technology, and the technology itself is much more efficient than the conventional engines. One thing also I would like to mention to you, yes, the waiting period has been long, but the engine is a little bit ahead of its time. and therefore when the fuel efficiency norms or stringent fuel efficiency norms come into play, this engine will take a lot of traction. And that is the reason why you are seeing a little bit of a delay in the fructification of this engine. But we are very, very optimistic about the capability of this engine.
Sure. And on the Euro 6 engine, we had earlier mentioned that we were probably not able to pass on the entire cost increase. And now with commodity inflation, what we are seeing for last few months, so how do we see that price correction? When do we see that price correction happening and then seeing our margins coming back to our historical levels?
So the transition from BS4 engine to BS6 engine has been a tough one for the automotive industry as a whole. And the positive thing is that the engine has been very well accepted in the market and the performance has been very good. As we go along, once the engine attains maturity, what you will see is a lot of cost reduction, the Propel initiatives being undertaken in the material cost aspect of it. Yes, we have been hit by the material cost by because of aluminum and steel price increases, but all our contracts with our key customers are indexed with the commodity pricing, and therefore any increase or decrease in the commodity price is automatically addressed.
That will be getting reset now at annual basis.
On annual basis, it gets reset.
Okay, and sir, on the Ampere side, what is the, so earlier we were expecting EBITDA breakeven very soon, but we probably see that with sales increasing, the segment losses seems to be going higher. I understand that we are probably in the investing mode as well, but and correlation to that now we are looking to further invest in a new plant. So what is the level when we expect the break-even levels and the business to turn profitable? And what will be the Capex for the new plant?
So in terms of profitability, Greaves, is a profit-focused company, and a similar ethos is also being extended to Ampere. Having said that, it's a early stage industry where still investments in technology, investments in people capability, investments in localization, etc. are required, and we are making those necessary investments into the business. Like I said, that as over the period of time, as the industry matures, the volumes matures, the profitability will come into this segment. Right now, it is about fortifying the base and ensuring that there are the right products and technologies which are available, so that we can improve our market positioning and market share in the segment. So this is one part. The second part about manufacturing, I think we have a plan, and at the right time we will come back with what is the quantum of capex which we are planning. But we are looking at it from a future perspective, that how do we build in a facility which can become a strong mega site for electric two-wheeler manufacturing for us.
And how integrated would this facility be in terms of, if you can explain us that, will it be more of a mega assembly site, or we will kind of have some kind of a backward integration, or if you can give us a perspective on that as well?
So I think, as we go ahead, we will talk a bit more about that. Maybe today it might be slightly preliminary to talk about it.
Sure. Thank you so much.
Thanks.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. Nagesh for closing comments.
Thank you. Thank you all for taking the time. Again, in summary, in the middle of the pandemic, we continue to focus on our defense plus offense strategy. We continue to take care of the things we control in terms of reducing structural cost, investing in people, technology, process, and Capex where it makes sense. We continue to be focused on profitable growth. Like was mentioned, I think the ethos of profitable growth will continue to drive Greaves. We've always been focused that way. We are getting into newer green shoot or green areas, which is the future. In this VUCA world, we are focusing on a lot of newer opportunities, and then the newer businesses are beginning to show the results that we started with our original strategy 3-4 years ago, which we said we wanted to get closer to the consumer. We wanted to make sure that we go through the entire life cycle value extraction. We wanted to get from organized to unorganized. We wanted to go from a product-only company to a product and a solutions and a services company. With that summary, I thank you all for your time. We will be happy to answer questions offline or take any individual conversations offline. Thank you so much. Have a great day.
Thank you. On behalf of Greaves Cotton Limited, we thank you once again. Stay safe. With this, we conclude this investor call. Thank you for joining us.